What do you guys think about this no interest rate hike? What are your thoughts? What do you think is going to also happen as a result of this?
Um,
Anyone?
Personally, on a personal level, I think it's personally good because man, those hikes hurt. Like after the first like 3 or 4, you're like, oh no. But
Yeah.
I don't know. I'm mixed about like outside of my own I guess use case. Like we don't know what the Americans are going to do. It sounds like they're going to increase it, and if they increase theirs, I guess our dollar is going to tank, which is not great. But
Yeah.
might say
I mean, if you're
it
if you,
might save
yeah.
some jobs, especially if you are working for American or deal business with Americans. Like you're in a better position to have a weaker dollar, but uh, I don't know about, but on the flip side, you're not right if you're relying on
Yeah.
sell buying things.
Right. Yeah, no, exactly. So in terms of buying, you're right. It's going to be, I guess it'll be harder in that sense of like even normal, um, everyday people who are just trying to like buy groceries or things like that, right? All those costs go up with a weaker dollar, right? And so it will affect us in that front. But hopefully they're taking precautions. They've raised it fairly aggressively um, for the last couple of months, right? I don't know how
Also,
quickly
we're
they
ahead of
caught up to Americans.
the U.S. Fed. No, like in terms of our interest rate as it is.
I think so. I think so, and so we can check that, but because they kept it at four point
What was that
five
Mo
now,
said?
we're
I
still at
He
four
got cut
point.
off on my end.
Oh, we're ahead. Like in terms of our interest rate is higher than the American Fed, right?
I don't know the answer to that. I don't know.
No, they're actually
I
ahead.
The
feel like
Americans are ahead,
yeah, I feel like yeah. They're at
Yeah,
five point
so
five, right?
they're four
Or
point seven
4.7.
five.
and we're at four
No,
point
four
five.
point seven five. Yes, we're at
Oh
four point
wow.
five.
Okay,
It's
well, I mean that's for sure
Yeah,
going to tank our dollar.
yeah.
it's interesting. I have
We'll
mixed
see.
feelings over the decision. On one hand, of course, it's great from a personal standpoint. Interest rates aren't going up, but on the other hand, it's like I feel like it may just be a move for now, just to see how things are, because the economy is slowing down, but I don't know if it's slowing down at the pace that they want it to. Maybe it's going to take some time for the interest rate hikes that they made to play out. Because, for example, if you just look at the real estate market, um, and maybe Cole, you can attest to this, but it seems like there's an uptick back in terms of people now jumping back into the market to buy, and we haven't seen the price drops that people were anticipating. From all these interest rate hikes, people are not being able to afford the mortgages. um like there has been, okay, so there has been price drops, but not, I should say, not um
Crash.
the rate, or the rate of drop, or the amount of drop that we expected. People are expecting, like, really
Yeah,
really low prices, but it didn't happen. Like, it's gone down.
yeah,
But if you actually look at some
yeah,
charts, I don't know if you can pull it up, but there are charts where you'll notice that it's actually the house prices have come down to the range at where it was pre-pandemic. So essentially, we've just gotten
yeah,
rid of the froth from the
Mm.
pandemic, and the whole money printing and all of that jazz, and we've just come back to where it was. So
yeah,
it's interesting to see now how it'll go going forward. But there's a couple of variables that haven't changed. One is we still have immigrants coming in to Canada. These immigrants need a home. And two, we don't have that many new builds being built. Like, the rate at which new builds are being built is so low that the inventory is about the same on the market. And so these new immigrants that are coming in are chasing the exact same inventory that everyone else who are already in Canada are chasing. And so that's why I feel like um, the the economy isn't moving that the way that maybe the central bank is hoping it would. But let's see what the upcoming next 3 to 6 months, as these interest rate hikes that took place in the past make their way into the system.
Yeah, it's
Yeah.
interesting to. I think like the average house price dropped like 20%, but when you compare it to the interest rate difference, it's like the interest rate more than doubled for most of us that bought a house in the last couple of years. Um, if you're on
Variable,
variable, but
yeah.
yeah, it more than doubled, but house prices only dropped like a bit, and then or not a bit, like a decent amount, especially if you are in the middle of nowhere and you bought a house at the height, you're down pretty bad. But like if you bought near a metro area, you're like down 20-25%. But given the interest rate hikes, like it's not proportional, right? Like if it was a 50% drop, I think everyone would be panicking, but I think, or for at least owners, but this is not, this to me as a homeowner,
Mhm.
it's reassuring kind of.
Yeah. See, it's interesting because my thoughts, and we discussed this last time too, and we were hoping that Turan
Oh
actually was on
yeah.
that pod because we went into detail about this. Um, and we realized that, or at least this is my thoughts on it, is the prices did drop, right? So I've seen houses that were listed before, even recently. Actually, we were going to show a house. We did show a house for 1.8. It was bought for, and the guy put $100,000 in upgrades, and he was selling it for 1.4, right?
Wow.
And it was listed for 1.48, and the realtor called and he said, there's still some room for negotiation, right? So they were trying to really get out. They were stuck. So that's a 500K drop
Jeez.
basically if he came down to
Do you know
1.4,
what they would do?
right?
Like, what happens if you get like, you just you file bankruptcy, or you just take the loan on?
It depends on how much equity he
Hmm.
put, right? So if he put down, if he had 500K in it, he could probably afford to lose that, but then be in the
For to
in the
lose
black,
that.
I guess, in a way. But
Well,
you
yeah.
you can't. But it probably took him a while to build that in his life, right? But I don't know. Depending
Yeah.
on how
If
wealthy
he's
he is,
got
we
a
don't know,
hundred
right? But
mil,
anyways,
that's a drop in the bucket.
that's a drop in the bucket, right? So, but anyways, they were willing to let that go, and I was like, that shows that it has dropped for certain things. And I've seen that not just in this instance, but multiple instances where they dropped 250K, even more in some instances, right? But the problem is that the interest rates went up, and so the
Hmm.
affordability is still hard. So we realize what it is like the prices dropped, but the interest rates increasing kept
Yeah.
affordability the same, right? People are still finding it hard to get into the market, especially
To
first time home
qualify
buyers, because they're
for a
like, all right,
mortgage.
to
Yeah.
qualify, because they're like, all right, wait a minute, my wages haven't increased, right? In fact, I've some people have been laid off, so now companies are less inclined because of the fact that they're trying to kind of uh what's the word, a phrase I'm looking for, but tighten their belts, so to speak, right? And so they're being very fiscally responsible, and they're not going to give out like crazy raises either. And so affordability has stayed the same. And then, as you're saying, Turan, for a very good point, is that there's more immigration, right? And less supply. They said that Canada needed to build 500,000 homes per
Yeah.
year to keep up with the demand, but they're making about 300,000. So we're 200,000 homes short every
And we're
single
bringing
year,
in about
right? So
480 on
as time
average, 480,000, 500,000 immigrants. Yeah.
immigrants, well, there you go, right? And so even if you divide that by four, because families of four or families of two, let's say, or three, right? You're still looking at 100, $200,000, 200,000 homes not
Hmm.
being made, right? And so I think what's going to happen is crashes happen when there's four sellers and there's no buyers, right? And so our the game is how quickly are the interest rates going to go up to the point where most Canadians cannot afford their house or their
Hmm.
mortgages, in which case they're going to be forced to sell, and then the interest rates are so high that nobody can buy,
Hmm.
right? And so it's a balance game. And I think that's why they're playing that game of keeping the interest rate at a certain point. Because if they go up way too fast, that system is not going to be able to prepare the wages or anything along those lines to be able to actually allow people to tighten their belts in terms of responding to it, right? And kind of taking proper account of their financial situations.
The other aspect to this, Cole, is yeah, that's a great point. But I feel like it's going to be hard for Canada to allow something like that to happen, where you know people have to sell their houses like that, just because how dependent the country is on real
Mm.
estate as a whole. And then you're also starting to see, I've been looking at Twitter, I've been listening to a few podcasts about the real estate market, and you people are starting to see banks now extending the amortizations on existing mortgages,
Mm.
where they're
Yeah.
pushing it back to like 35, 40, 45. You might even see 50 years, right? And just to allow for people to, in order to, not get into a situation where they have to just sell the house. And so,
Yeah.
these things are happening. And that's the thing, right? Things can be changed with a stroke of a pen, or a click of a button. Like,
Mm.
they have control over these things.
But I think you don't want to extend. Like I think it's the same as like car loans. Like people getting car loans for 8, 9 years,
Hmm.
which is longer than what the car will last.
Yeah.
An 8, 9 year
Mm.
a loan for a
Yeah.
deprecating asset.
Yeah,
Yeah.
my previous one was like 7 years. I'm like, I don't know what the hell I was
Yikes.
thinking when I did that. 7 years. That's like longer than the I
Did
don't know
you
if the car
drive
would
the
have.
car for 7 years?
I don't even think the car would. I don't have any more, but I don't even know if the car would have made it 7 years. Like it's it's
Yeah.
a long. Yeah, because I think the same thing with health. If you
No,
go to
get
50 years, like
That I mean, yo, there's countries with 100 year mortgages. There's
like
Oh, really?
mortgages you
yeah.
could pass down to your kid. Japan, yeah,
Jeez.
because I mean, Tokyo
Even
got so expensive
even
that
England said
yeah,
that.
that was the only way they could afford it, right? Is that like it's a multi generation mortgage?
Damn.
Yeah. And I think like at the same time, as long as they allow you to pay in between, I think what it does is for the fiscally responsible, I think it will be beneficial in this tight time because there are waves, right? So it's going to be a point where
how you
it
can
might,
get out of it. Like if you're, I think if we're stuck in, like if you're always stuck now in this 50 year, can you really get out of it?
yeah, because first of all, well, you can sell. No, I'm just kidding.
If
But my jokes aside, is like you can pay
Yeah.
quicker, right? That will reduce your amount very quickly, right? So instead of paying
that
monthly,
means
you start
that means
paying
something in your life changed where you can now afford to pay quicker. So that means your wages have to
yeah,
go higher or something.
yeah,
Or can you
exactly. So
renew at the time of renewal of the term? I believe you can change the amortization, correct?
But again, I think this is like saying that like, wages are gonna double, where you can now afford to
Or
increase. You
or,
can
or
now
interest
pay
rates
more.
come down, or interest rates come down,
Mm-hmm.
right? In 5 years, some people are hoping that. Some people are hoping in two, three
Okay, yeah. If
years.
interest rates come down, your loan's still the same amount.
Yeah.
yeah,
Not if
the
you're
whole point
not
is to have
if
cash
you're
flow.
variable, it will come down with the rate.
Yeah, right
It,
away.
Yeah, if it's
But
yeah.
fixed, it
speaking on
won't
the
for
interest
5 years.
rate
Yeah.
point, and especially versus the Fed, one thing I didn't realize earlier is that like Canadians have to renew every 5 years. So even if
Yeah.
you got a super low rate,
Yeah,
right?
and the
Like
U.S. is 30
you'll
years. How do
Bro,
you?
yeah,
How
bro,
about
yeah.
30
30
US
years?
is fuck 30
Dude,
years.
I was
That's
Sorry,
why
talking.
like
I
rate of
swore.
they can raise these rates higher because like for a lot of, especially if you got a fixed year 30-year loan on during COVID when rates are like 0%, bro, you're
Yeah,
laughing to the bank.
Yeah.
yeah. I was talking with my
People did that.
father-in-law,
Yeah.
and he was telling me 30 years. I'm like, no, not how long your term is. Like, how long you locked in? He's like 30 years. I'm like, no, like I know you're saying 30 years, and then
And he's like, no, you're
yeah,
wrong.
I was mind blown. 30 years they lock in. I'm like,
Bro,
that's
That's
US,
insane.
wild.
US, the amount of stuff you can get away with. Like, even when you sell a property in
Yeah.
the US, you can sell an investment property, and you can, within 12 months, I believe it's 12 months, roll it into another property.
No, no. It's not 12 months. It's
90 days.
90
Okay,
days.
it's some time frame, whatever that time frame is. You can roll that capital into another property and not pay taxes on it on the
But
the
here
gains.
you can roll it in. What, it has to happen instant?
No, you can't. You're paying taxes on capital gains. The only way you're
If you
not,
roll it in,
only if it's a principal residence, you're not paying capital gains.
I thought you could roll it in.
Nah, I thought that too. You're
Not on investment.
Justin wants his cap. Justin wants his money,
Yeah.
man.
So there is it's called the 1031 exchange, by the way, in America. I just looked
Is
it
it 90 days or 12?
up.
1035,
Actually, I'll
right?
have to
1035
check. Let
exchange.
me- No,
1031.
1031.
Okay, I had a feeling it was one of those.
Yeah. 45. So 180. There's a 45-day rule. First relates to the designation of the replacement property. Yeah. Also, within 45 days of the sale, your property, you must designate the replacement property in writing to the intermediary, specifying the property that you want to acquire. The second timing rule is delayed exchange relates to closing. You must close on the new property within 180 days of the sale of the old
You
property.
have to report
So
it.
within 45 days, you need to report it. Be like, I'm going to buy this property, and within 180 days, you have to close.
That's
So
on
you
that
got
cool.
property
6
as
months.
well.
Yeah,
Too
That's
close.
pretty-
Yeah, basically
pretty dope.
to close.
Yeah,
And yeah, that's freaking amazing because it's like you can just
Roll.
right, like the moment you know that you have a feeling you're gonna sell, you already should
Is
have
that
another
only on
property in line.
investment, or can that be personal property?
anything, I think.
Well, personal, I'm pretty sure it could be anything, but personal
I
in
guess, yeah,
general, like even we
personal.
have that.
Yeah, okay.
Yeah. But the fact that they can have a 1031 on any property, it's insane. It's like you're deferring taxes right to the end.
Literally all the wealthy people in America, that's all they do. Just 1031 everything.
Yeah.
Oh, so this is
So speaking of 1031,
Speaking of Americans,
America.
Sorry, what were you gonna say, Ali? Before we
is
move on?
this just only on properties? Or is this like just any like capital gain item?
No, property.
I think it's
Oh, shit.
Can you
property.
imagine on
It's
That's
like-
the thing. One thing Americans don't
stocks.
have a tax-free investment account because we do.
They
we got
have.
that.
Yeah,
Yeah, they do. It's
Yeah,
called
it's
the
No,
Roth
no,
Roth
that's
IRA.
like isn't Roth IRA more for like retirement?
No,
That's ta-
there's
Mm,
401k.
no,
That's
that's their tax
401k.
rate.
401ks, RRSP, Roth
Ah.
IRAs, or
Yeah.
tax.
I'm very ignorant to American terms, so I apologize to Americans listening to us.
Noise. I read too many of the American stuff, and then I always have to find the corresponding Canadian stuff, and I'm like, man, like. I hate those books. They'll be like, "Yeah, you could do this," and you're like, "Really?" And you start reading it, and then it's like,
You
"Roth
read it, you're like,
IRA."
wait, this is
Ah.
illegal.
Yeah, exactly.
If you feel threatened, take out your gun. Wait, you can do that?
Wait, you can have a gun?
Ali,
Uh,
Ali's tries selling his stock in America and his brokerage account. Wait, I want a 1031 for my
1031.
stocks. No capital gains. I already know which stock I'm gonna buy. With this.
Give my 1031 form, please.
If you have any comments, let us know. Any other questions you want answered, let us know. Subscribe and like, please. Yeah. Was there anything else anybody wanted to add?
I'm
Good
Gucci.
opportunity.
All right. Take
Peace
care,
out,
everyone.
everyone.
Easy.
Thank you for listening.